Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that any recovery for the world's largest economy is looking increasingly tenuous. Their incoming administration has been handed a mess. There is a mountain of American data to report today, a dump just before their long Thanksgiving weekend. Next week, it'll be all about the signals from the retail sector. But first, US jobless claims for last week came in higher than expected. In fact, a small dip was expected, but a rise is what they got, to 778,000 new claims. And the prior week was revised up, making matters worse. The recovery in durable goods orders slipped in October from September, but at least there was some small growth. However, there was no progress to report for the American merchandise trade deficit. It came in at a record $87 billion for the month, with exports down 7.1% year on year and imports little changed. There is good news on one front, however. Sales of new built houses are holding at their high level of about 1 million per month, and that's more than 40% higher than a year ago. That makes it 4 months in a row for sales at this very elevated level. Not so good is data for personal incomes in October. They fell more than expected while spending stayed in growth mode. It is not a trend that can continue much longer. The latest consumer sentiment readings continue to show lower levels and lower expectations. In fact, the November levels are more than 20% below where they were this time last year. In China, regulatory pressure is rising on the many SOE companies that are under bond pressures. And China has substantially dialed back its criticism of Australia, saying recent remarks by Prime Minister Morrison were positive. It is hard to tell at this point whether this is a reset or just a test of them. In France, they've started its crackdown on Google and Facebook, among other US tech giants, for tax avoidance. The US is on record of saying it will retaliate if this happened, but the situation is less sure now. And the US Treasury 10-year yield will start today 2 basis points lower at 0.87%. And the price of gold has recovered some of its big falls over the past few days, up $7 today to $1,811 an ounce. And oil prices are higher again today, up by another 50 cents or so a barrel to $45.50 a barrel in the US, while the international price is now just on $48.50 a barrel. And the Kiwi dollar has risen to 70.1 US cents this morning, and another good gain since this time yesterday. And it is now at a 30-month high. Against the Australian dollar, we're firm at 95.2 Australian cents, and against the euro, we're holding at 58.8 euro cents. That means our trade-weighted index will start today at 72.6, and the last time we were at this level was in March 2019. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.